Hello guys again. It is time to move towards the chapter 4 in our trading manual, and this is one of the most important chapters in educating a trader, so to say, because we're going to deal with the basic patterns that are going to be met in the trading world, not only currencies but also when trading stocks or whatever. These are universal patterns, so pay attention at this chapter. This recording's purpose is to deal with double tops and double bottoms, and these are important because they fall in the category of reversal patterns. That means price has the tendency to exit the pattern in the opposite direction than the initial direction that it entered the pattern. They are closely monitored by traders because, for example, you are bull on the pair or bear on the pair, and you're looking for the price to reverse. Then you're looking for reversal signs, reversal patterns like double tops and double bottoms, like rising wedges or falling wedges, like inverse head and shoulder or head and shoulders, and so on and so forth. The minimum objective for a double top is the height from the top projecting downward from the breaking point, and the same it is valid for the double top for the double bottoms. And the minimum objective is the vertical line projecting from the top till the breaking point and projected to the upside. Now, for the purpose of illustrating a double top and a double bottom, I choose this is a weekly chart, and what you're seeing here, it is being called a double top, and this is the double top formation, and this is the euro dollar weekly chart, and these are the highs into the 160 area, and this is a double top with, let me take a trend line like this. So this is the breaking point, okay, and as you can see, the double top and the double bottom take the forms of an M or a W, and this is the form of the double top. Let me take a trend line like this, so something like this. See, it resembles with the letter M, resembles with the letter M, and it looks something like this. And like told you earlier, the measured move, so the minimum objective for the double top is the height from the top, so take the top in here, project it downward from the breakdown point. So this is the breakdown point. So you will just take a trend line, you measure the height in here, like this, copy it and project it on the breakout point, like this, and let's make it of a different color. Let's make it like this, red. And this is your minimum objective. This is your minimum objective for the reversal pattern, and just put a price on it, and there you go. You have a double top in the shape of an M, and the minimum objective for it was 146.63. Now, keeping in mind that this is being called a reversal pattern, and this is why this is a minimum objective. It doesn't mean that the price would not look to travel further. It just means that for this specific pattern, this is the target. Opposite for the double top, of course, it is a double bottom. It is a mirroring image for this move. Only that instead of an M shape, you have a W shape. As a rule of thumb, one thing that you should take into consideration, there is the higher the time frame, the powerful the reversal pattern. And so such a pattern on a monthly or a weekly chart, like it is in this case the weekly chart, should be treated with more respect than, let's say, one double top on the 5-minute chart on the 1-hour chart. One more thing to say before giving you another example. So this is the the double top example on the weekly chart, and if you go on a 1 hour chart in here, let's say a 1 hour chart, and let's make a little bit, let's change the template, let's choose another template. So template, let's make it like this. So if you choose this template in here, this is a 1 hour chart, and what I want you to see is that the move that comes into, so mark the lows in here, mark the lows in here, and this is 27.51. Let's change a little bit the structure, and as you can see in here, this is 27.51, and look at the price. So price coming from the upside and makes a move towards the 127.50, then makes a retracement, tries again for the 127.50, only for the price to be rejected. Now you see, this resembles with, and let's take a shape like this and try to highlight what we have discussed in here. Let's change the color, let's make it bisque, and this resembles the double bottom pattern. So let's write in here that whereas earlier I showed you a double top, this is being called a double bottom pattern, and it should be in the shape, it should take the shape of a W letter. Now the measured move, the minimum objective for the double pattern is to take a horizontal line from here and look for the breakout point. So the breakout point is something like this. Let's change the color not to be confused. And then measure the height, so the height in here till the breakout point. Let's take it of a different color, let's make it magenta for example. And this is the measure mode, copy the line, put it on the breakout point, and on the breakout point actually you may have, let's put a number on it, and you have your target 129.95. So this is the minimum objective. So you can even write on your charts all the time, you have the occasion, so minimum objective for the double bottom pattern. So this is the minimum objective, and because they are reversal patterns, it doesn't mean that the price doesn't go forward, but this is the measured move for the price. And you can see that actually we had such a pattern in here on recent days, with the recent move that the price with the recent dip that the price did into the 127.50 area. One important thing to mention, still based on my experience, whenever you are looking for a double top or a double bottom, don't try to look for exactly the same pip to be on the highs or the lows, because when price does such a thing, usually that double top or double bottom pattern will not hold. It is going to be broken. We had such an example lately on the Australian dollar, US dollar, and let me show you. If you open a new chart, let's open File, New Chart, and let's choose the Australian dollar, US dollar from here, and then choose our template. We said let's make a template like this to be friendly to our eyes, like this. And if you give it a little bit of a zoom, and this, let me try to identify it. This is the possible double bottom that I want to show you. They have exactly the same values by the pip. So the price in here, it is the high in here. Look on the left side on the data window. The high is 104.90, and the high in here, it is again 104.94. Okay, in here 104.94, and here 104.91. So when they are so close, then look for it to be a fake move and to be broken. As you can see in here, price actually tried for that area once, tried twice. So if you would have played this one as a reverse, as a reversal pattern, as a double top, then the measure move should have been something like this, and taking from the upside, so the measure move should have been something like this. So the minimum objective would have been something like this, projected in here, but one moment. So it should be something like this projected in here, but this is not the case because, judging from my experience, the values are too close, and as you can see, it was being broken to the upside. So look more for the area of reversal, not going by the pip. Into the same category of double tops or double bottoms so in the same category like reversal patterns fall the triple tops and deep triple bottoms, but also I'm not going to take a look at them because a triple top or a triple bottom rarely holds. As a book recommendation, I strongly recommend you to take a look at the Martin J. Pring Technical Analysis Explained, and the book reference is on the text to follow this recording. Next recording is going to deal with head and shoulders. We're going to take a look at the head and shoulder patterns and the inverse head and shoulder, and this is also a reversal pattern, so stay tuned, stay safe on the markets, and have a great day.